Yo, what is going on, everybody? Welcome back to the channel. So in this video, I basically want to go over what an Amazon loan is, how it works, and just break down a little bit of basically how it works, really. Because I know some of you probably have seen this, maybe you've heard about it, and you're not sure whether to take one or how to even get one, right? So I'm also making this video because recently I got a offer for a bigger loan than what I already had previously. So if you follow me on Instagram or Facebook, you would have seen that they offered me basically 44K, and I'm still debating whether to take it all or not. Because I'm working with a new supplier, waiting for him to call me back. Hopefully, he calls me back today at the time of this video. And if we can make it happen, I might just take it out and probably spend at least 70% of that on just that one supplier. So we'll see what happens. I'll keep you guys updated. First things first, be sure to smash that like button. Drop a comment down below. Let me know what you guys think. And yeah, let's get right to it. So, Amazon loans. You've heard of regular bank loans. You've heard of like loans from different sources, third-party services. But you probably might not have heard much about an Amazon loan. Or maybe you have, and you're just not sure how it actually works. So essentially, to even get this loan, you have to be offered it, okay? It's basically invite only. You can't go around anywhere applying for it. They have to send you an invite. And they'll send you an invite when you meet a certain criteria. Now, I forgot what the exact criteria is for this type of loan, but I think you have to make at least over 10K in sales over a 12-month period, sorry. I know you have to have an established business, so meaning you have to have at least a S Corp, LLC, that type of business structure. So make sure you have that set in case you do want to be offered one of these loans. And I forgot what the other one. I think that might have been it, honestly. Yeah, I think that might have been it. But yeah, so essentially, you just got to keep selling, and basically prove to Amazon that, hey, I'm making enough capital, making enough money from selling on Amazon. I'm worth your time to maybe possibly get one of these loans sent to me, right? And so, in due time, they'll offer it to you, and boom. Now, the time that they may offer it to you, it varies from person to person. I didn't get my first one until like after a year or so, and mainly because I didn't take it serious in the beginning of the first half year. But yeah, I got it, I think last year actually is when I first got my first loan. And so I took it because it was coming up to Q4 and whatnot. And yeah, so essentially with these loans, they'll start out very small. They'll offer you $1,000, $2,000. At least that's how it happened with me. And then you'll take it out, pay it back monthly, base by base, month by month, sorry. And I mean, down the road they'll offer you more, but yeah. So basically, again, it's invite only, and well, what they offer will vary from person to person. I've seen some people they receive $2,000 up front. Other people 10,000, 20,000. I mean, a lot of this is going to depend probably on how much inventory you have, because one thing about these loans is that they do use your inventory as collateral. So if for some reason you're not able to pay it back, you're not able to make those payments, all they're going to do is simply take your inventory. Now, that may sound harsh, but I mean, honestly, if you're flipping a lot of inventory and flipping items and, you're able to make those payments, it's not too bad, honestly. Worst case scenario, take your inventory. Personally, to me, I don't mind because hopefully they take my data inventory, honestly. Get rid of it like that, but hey. Now, as far as how the loan actually works itself, payments and all that stuff, I mean, obviously the more you take out, the higher your monthly payments are gonna be. So, when I first started out, when I got that first 1,000 or 2,000, I don't even remember the exact number. My payments were like barely $100, $200 or so to pay it back. And this was within a 12-month period, I think, or 9-month period. It wasn't that long. So I easily paid it back. But now, since I have a 44K offer, those payments are at least $3,600. So, the more you take out, the higher those payments are going to be. And I mean, obviously, the more money you're going to take out, you should be able to flip that money back and make more than what you're going to owe. And that brings us to the APR. When it comes to traditional loans from other banks and stuff, from what I've seen, their APRs are pretty high. They're around 13%, 17%. I've seen some for like 20%. With an Amazon, they're relatively low. At least for me, they've been. I mean, the ones I've gotten, they've been around 10% max or so. And deciding whether to get one of these loans or not based on the APR matters a lot. Because if you are sourcing products that are making you barely 10%, 15%, it might not make so much sense to take out that loan just because of the interest alone, where you're basically going to be breaking even, right? Now, if you're able to make way more than that, say 20%, 30%, 50%, or whatever, then yeah, it's almost a no-brainer to take out that loan, assuming you know how to spend it. And that brings us to another point, guys, is that when it comes to these loans and deciding whether you should take one or not, you have to think to yourself, if I take out this amount, will I be able to spend this amount relatively fast? Now, you know, when it comes to loans, you don't want to keep that money in the bank sitting month after month, okay? You want to be able to use all of it for more inventory so that you're able to flip your money faster, thus, you know, beating more than what the APR is and scaling your business even more, okay? That's the thing with the business, is that you can use this money to scale your business to where you would be, you know, capped on capital. So if you invested with $10,000 in the beginning and you maxed it all out, you know, another 10,000 probably wouldn't hurt, right? So again, you know, you gotta know your business, know yourself, and understand the numbers when you break them down. So, you know, like I said, I'm offered a 44K loan right now. That means mentally, I want to spend that 44K in 1 month. So if I'm going to spend that, I need to know exactly what I'm going to spend it on. That way it's just not sitting in the bank, okay? Because if it's just sitting in the bank, you're just going to be paying interest for no reason. And honestly, Amazon doesn't care. They're going to get their money regardless. So now, again, so you know what you want to spend it on. If you don't know what you want to spend it on, then maybe don't take it. And I mean, and that's another thing about these loans, guys, is that you don't even have to take the full amount. You can simply take a partial part of it. So they're offering me 44K. I could decide to take only 20K, 10K, 5K. And so the same goes for any of you guys too. You know, they offer you 5K, you could just take an extra 1,000. You know, you don't have to take the full amount. So you get to choose how much, and it'll show you how many months you have to pay it, the APR, all that good stuff. So it'll break it all down for you right there, okay? So it's not too bad. Now, probably the best thing about an Amazon loan specifically, especially when you need funding for your business, is that it does not run your credit score. Like a traditional business loan from a bank, some banks, they do run your credit score. An Amazon loan, they don't. They literally just, I guess, go based off your seller criteria, and boom, you're approved. No credit check or nothing. And that's good to know, because at the time, I think a while back, I was trying to buy a home, and I didn't want to take out any loans or anything for the business, or any credit cards, for a matter of fact. And so had I been landed this loan, I would have so taken it, just because, you know, they don't run a credit score, and that wouldn't have affected my home buying process. So that's another positive thing about these loans, is that no credit score, no credit check, none of that stuff. It doesn't hurt your credit whatsoever. And I forgot the last point I was gonna make, honestly, guys. But I mean, these loans, just know yourself, know how you're gonna spend it. If if you're not good with debt, then just don't take it, okay? Again, you're not obliged to take any of these things, guys. They're just there as services to offer to you in case you do want to take them. But if you don't like debt, if you don't like owing someone, if you don't, you just don't want to mess with it, that's okay. You don't have to do it, okay? Just simply leave it alone. Eventually, it'll go away. Heck, I think sometimes if it goes away, they come back offering you even more. So, I mean, I've heard of stories like that, so that's pretty crazy. So, yeah. But again, no credit check, none of that. It's a pretty simple process, honestly. Like I said, depending on you, this could work, this couldn't work. For me, it worked for me in my business. It helped me scale a little bit more than what I probably normally could. And for some of you, it might also make sense too. And again, just weigh out the pros, the cons. Make sure you can make those monthly payments. Again, make sure the ROI makes sense. And yeah. And one last thing about these loans that I remember now is, if you accept it, it'll usually take a day or two for them to review it or whatever. But normally it's almost the next day. They'll approve it. And yeah, they'll basically distribute those funds to you immediately. Like, you'll still have to wait 2 days or so for it to hit the bank, but they send it immediately. And literally within that 1 week, you'll be able to start spending all that money for more inventory. So that's another good thing, is that you'll get those funds immediately, and literally get straight to work and flipping all that money. And yeah, killing the game out here with Amazon. But hopefully that helped you guys. Hopefully that broke it down. Hopefully that made a little more sense. I mean, obviously you can just go on Google and search all these guidelines and stuff, read more into it and whatnot. But in basic terms, that's basically how the loans work. Again, at the end of the day, it's gonna be on you whether you decide if it's right for you in your business or if it's not. Okay. So with that being said, guys, I'm gonna let you guys go. I hope you enjoyed this video. I hope you found it useful, helpful. And yeah, if you ever get offered a loan or you have any more questions about any loans like these, you know, shoot me a DM. I'm not a CPA or anything, no financial advisor of any sort. So again, I'm just a guy with the camera, just recording videos. So yeah, just throwing a little discreet out there. But with that being said, guys, I'll see you in the next one, and let's get back to it. Starting to rain.